those who don't know anything about payroll, I guess. So obviously, payroll, with payroll tax, we're talking about individuals who are employees. We still call them, well, we usually call them like employment taxes, payroll tax. We still call it payroll taxes when it's self-employed individuals, but the reporting for those self-employed individuals is a little bit different. As all of you know, though, the amount that is withheld on paychecks is the total for the year is then entered on the Form 1040, and those are prepayments for the taxes. That is used then to offset the total tax liability. If you've had too much withheld, you get a refund. If you haven't had enough withheld, you have to pay additional amounts in. So we do this because the federal government, they're just like us, they need money, right? They need money to do stuff. Whether or not that stuff is worthwhile is up for debate. But they need money on a regular basis. It used to be back in the olden days when the income tax was kind of first implemented, they didn't have withholding. So at the end of every year, people would have to pay their income taxes, and they'd have to come up with a whole amount during the year. That's pretty difficult. The IRS, or actually not the IRS, Congress decided, and it happened during World War II, that they implemented the withholding in order to maintain a regular flow of income for the federal government. Also, kind of helps with collection as well. It's a lot easier to preemptively withhold from people's paychecks than to try and get the money from them in bulk at the end of the year. So, and these are the taxes that we are discussing in this chapter, those that are withheld. Recall tipped employees. We've got some special rules with regard to tipped employees, which I think we looked at that. We look at that a little bit in this chapter as well, but we're going to talk about, so withholding, reporting requirements, and what happens in certain special situations. We don't need to do that. That was fast.